How's everyone been doing lately? You guys probably not loving the ranging markets too much.
Tragic.
Not I honestly, I was looking to short this and didn't give it to me. Then I was looking to take a NOS long here, but when we ended up getting this, let's see, I had a so here I had a really good momentum candle, but it never left this range, so I never got my long there. And then now I'm kind of waiting on this, but it doesn't look like it's going to happen today either. It's been yeah, this is I've barely taken any trades this whole week. This is the second day this week I didn't touch anything. Euro, I honestly the only thing that matched my plan was, let's see, where was it? So we had a flip zone here earlier, and this is actually something I haven't gone and tested. So you guys are probably aware we've been testing everything with just bodies lately for chalks. Um, One of the things I had just mentioned to Brian, and I don't even actually know if I even told Nathan about it yet, but we have the basic chalk, and what we were looking for is basically something along the lines of a chalk happening. And initially, when we had been taught to change a character the way it was taught to me, everything I've been told is always, I was always told Wix, and they've worked quite well. But going back and gathering some data, especially on Brian's side, he went back and gathered data on this, and we had found some similarities between the losses, and the similarities were the chalks that were bodies on both ends rather than the wicks appeared to be stronger. So yesterday, I just ran this by Brian yesterday, and something I want to test. I haven't gathered this yet, but what I wanted to test was wicks to the liquidity sweep side and body break in the direction you want to go. And that was honestly the only Euro trade I seen that fit my plan today, where we had wicks to the downside and a body break to the upside. Um, on the flip side, if we were selling, we had a scenario here on gold yesterday. And this is actually what kind of dawned on me yesterday. So yesterday we had, let's just gonna rewind to here. So yesterday I had kind of looked at this a little bit different, and this is where we decided to gather data on this too. And the data was that maybe wicks to the liquidity sweep side and maybe a body break in the direction we want to go is worth looking at. Right now, it's just an idea. I haven't actually tested it. I have seen it play out in the market a few times, but until we've seen, 100 or 200 trades go, and I have the proper data, I haven't really pushed it too far in the community. Like right now, I'm still trading, looking for body breaks both directions until I get the data on this. But the whole idea was we're supposed to sweep liquidity, which it does here, and then we want a body break in the direction we want to go. And if we actually think about this from a logical perspective, wicks to that side should actually give us further confluence to go in this direction. So in the next 2 weeks, I'm going to be testing that too. And we'll see where we get to with that. But if you see here, we did end up getting a perfect gold short from that. And we can actually play this forward a bit. This trade did end up running, and it did end up running the week low. But the whole concept was, rather than wicks to both sides, we switched to bodies to both sides. And now something I'm testing is what I just told you guys about, is wicks to the liquidity sweep side and bodies in the direction of travel. So it is just something I wanted to make everyone in the community aware about. It might be something you want to put to the test yourself. Once I have some data on this, I'll update you guys and I'll let you know. Like if across 200 trades or 100 trades, this is a good system, I'll let you guys know. If I find it's no better than Wix, then I will likely keep pushing for body breaks in both direction. But that's kind of been my little discovery, something I thought of literally yesterday. A bit difficult, but not that bad. Yeah, the market's been a little bit rough, but that was honestly the only euro trade I seen. I watched this play out, but I don't have the data behind it yet. So as of right now, I'm still waiting for body breaks. So I didn't actually end up taking this. I sat there and cried as it went. But that was about the only thing I seen that lined up with my plan. And then the other plan I had, I wanted to short this, but it never came back. And then Dawson Gold never really played ball either. And GU, I don't even want to look at this pair right now. It's just been it's been pretty gross. It's been this for quite a while. How are you guys? What's trading been like for you guys in the past few weeks? Do you guys have any questions? GU, yeah, man. It's if you look at the 4 hour on GU, it's literally been, well, it's been gross, then it trended for a day, trended again for a day, then it's gross, then it trended for a day, and then it sat in a range for a week. And that seems to be kind of what a lot of the market's been doing lately. Gold on the 4 hours has been pretty gross too. And yeah, it's not pretty, but nothing's really been moving a whole lot. I'm still short biased on this for the time being. Same with euro. From the daily and the weekly perspective, I would imagine it's going to continue on down until it doesn't. But I would imagine this becomes a weak low, and there's a probability it will get run, and this zone will probably get tested again. I had a question. Yeah, go ahead, man. What's your question?
Could you go to euro in 10 minutes?
Yeah.
I want to annotate one thing.
Yeah, let's do that. Let me actually delete all of this stuff too.
Could you go left a bit?
Yeah. How far left?
I saw something. I think I don't see it now. Was it to you before? Well, let me check on my charts. I'll come back soon.
Yeah,
Okay.
no worries. Does anyone else have any questions? Does anyone else want to share a chart or anything? Nothing. Hey, quiet bunch. I've seen some of you guys did quite well this week on a few trades. I honestly just kind of been sitting back waiting for it to do something and trend. And yeah, I got pretty excited on gold today. I thought I was going to get nice trend up, and then I started looking at it, and once it did start trending up, yes. And then once I did start see the trend up, I was just like, well, it's pretty in premium. 4 hours still bearish, so I kind of lost my interest. And then I did want to short it from here, actually. And in all honesty, that was past trading time too. So yeah, I didn't get anything. The only other thing is I've been waiting for this, which also never aligned. But yeah, aside from that, I really didn't see a whole lot today. Are you just testing Wix for liquidity sweep chalk setup for the seconds entries, or are you looking those at the minutes? I'm looking at that for everything. 10-minute, 15-minute, seconds, everything. And the concept is Wix to the sweep side and body break to the in the direction of travel. Like I said, I don't have the data to back this yet, so right now it's just an idea. Right now, I am testing body breaks in both directions, and it saved me a lot of losses. So until I have some actual hard numbers, I don't really want to push this on the community too much. But it is something I want to let you guys know about, because the more people that test this, the more data we have, the more concrete, of actual evidence we have, and we can make a decision which way you want to go. For myself, I'm testing it across many pairs. So if it works on like say EU, but it gives me a low hit rate on gold, I likely won't use it. I want to see how it does across every pair in general. I had one trade today that broke even. Other than that, do you see us sitting on EU? I'm actually not sure what you're asking, but yeah, I would say using a 4-hour demand for sure. This one here. I don't imagine this demand's gonna hold. It might, but even if it does, I would imagine it'd be something like this. As of right now, obviously all the pressure's been bearish, and until that changes, I would imagine it'll continue. We did make a lower low, so I was thinking we'd make a lower high and another lower low, but like I said, I don't know how much it's willing to retrace right now. I found something similar to ask about the concept. Yes, that one you got it. Okay.
So go to 12 minutes.
12-minute. Okay.
And I was like looking through this concept of wick down here and engulfs with a full body this black candle.
Yeah.
So I was looking at this, and for example, if I see a wick above 50% of the body of this candle here,
yeah,
I'm doing 50% entries from the wick.
Oh, okay. So, like, see, for me, I'd be willing to take a buy down here because, like, yes, we broke this to come down, but this really didn't do anything. If you look at it from a higher time perspective, we only wicked above. So this isn't like it's kind of a demand, but it's not. So this to me is more inducement for this. So like here, I'd be willing to try a buy. Once we get down a little bit lower, I'm not sure why that's not changing. Let's try 15-minute demand. Yeah, I know what you're talking about. I'm gonna get to that. So like right here, I'm willing to just try a buy, and you easily got a 5R. Down here, for me to want to get involved in something, I need a new chalk. And you did get one here, and you did get a tap in, and it went about 3R, and it broke you even. But as for just putting an entry on this, I don't know if I would, because at this point you've retraced all the way down, right? Like I said, to me, a break of this isn't anything crazy important. Like I said, this is probably inducement to me. This isn't really a true demand, as it didn't do anything if you look at it from the higher time frame perspective. Enough to consider it a chalk down. Yes, a true demand, not so much. That's why I said I'd be willing to buy from here. Once you get down here, I would likely want to see this chalk. And I did actually draw out this trade, paper trade. It went 3R, and it did tap you in nicely right here. And this was again with the theory I was telling you guys about, where we get a wick to the downside, but a body break in the direction we're heading. So this is in line with that theory I want to test. This one broke you even. Depending how big your stop is, you might have squeezed the 5R out of it. I'd likely cover at least, I don't know, 1.8, 1.7 or something. So you might have, yeah, you didn't, almost a 5R, but yeah, this would have broke me even. But that's kind of it for me. You get your higher time frame chalk, and then it taps in, and only then would I take that, because how far down it's come, right? It's also bearish on every time frame. Do you take partials on 5R trades? Either hard TP at 5R counter trend, or yeah, I'll take Soyuz trade assistant, and on any trade I take, it takes a percentage off at 5R, and then usually the rest I hold into a 15-minute or 4-hour target. Unless it's counter trend or just not well priced, then I'll hard TP. Go ahead, buddy. What's up?
So I tested data on counter trend trading. For example, taking profits at 5R for me at least was only 4 out of 10 times per, let's say, taking 10 trades. I would only get 5R 4 times. However, for 4R or 3R, I would get 7 times out of 10. So
It's actually funny that you mentioned that. There's a guy in our community, Bruno, and like Bruno is a really good trader, very well disciplined. And Bruno so for a while he did 3R hard TPs and he took a $2,000 account to 25,000, no problem. And then now he's doing 60% of his volume off at 3R and holding the rest into a higher time frame target. And he's doing quite well with that too. And he told me something similar too. He found the 3R hit rate was quite high. And as soon as you went to 5R, the hit rate goes way down. And which makes sense, right? The higher risk reward you seek, the the less likely you are to get it. So like WWA pushes for whatever it is, 1 to 10 or 115 or 1 to 30R minimum, which is fantastic when you hit it. But how many losses and break evens do you take until you get it? And myself, I would rather have a 3R and a 5R and a 4R and have those more consistently than lose 20 trades before I get a 30R. 100% though, yeah, your data is definitely correct. 2R and 3R will definitely, you could be completely wrong and still get your 3R because the 3R on Euro is what, 3 to 6 pips most times. It's very doable.
I mean, even something I thought about too is that you could, a lot of people go think about these challenge accounts the wrong way. If you struck and said, I'm just going to take one trade a day and let it be 2R, you could easily pass your accounts a lot quicker with a lot less stress and not even think about the time that it takes for you to be able to complete it because you're statistically going to get more 2Rs and 3Rs, like Rob said.
Well, even look right here. Sorry to interrupt you, Brian. Even look right here. We never got our 5R, but if you hard TP'd at 3R, no problem, right?
Yep.
And this will happen all over the chart lots. I don't know how many times I've had a trade go like 4.8R, 4.7R, and then it breaks me even, and it hurts. But at least I pay myself at 5R, and now no matter what, I used to just hold full volume until higher time frame TPs, and I'd break even on like 10, 12, 13R trades, and I'm just like, man, why would you break even on that? And I think Nathan broke even on a trade he had run at a 12R yesterday, and I could like feel his pain on that. It sucks. But yeah, sometimes 4.2 to 4.0R just reduces hit rate by 20%. Yeah, exactly. And like, I'm personally okay with 5R, but let's say I enter a trade that's got let's say I'm taking a 3.5 pip stop on Euro. Chances are I would pay myself before 5R because depending which pair you're at, if this was GU, I wouldn't feel too bad about Euro, especially if you're going counter trend. To get Euro to go 18 pips in your favor, it's not really a trending pair unless you're going 4-hour direction. So this is probably where I'd pay myself at 3R or 4R and just slide my partial TP down on my little entry tool on Trade Manager. And it all comes down to what you want. You could even say something like, hey, my hit rate's been really low this week. Maybe I will partial out at 3R, 3.5R, or 4R just to get my head back in it. Because again, if at the end of the week you got 9R because you hit off 3R trades, that's a good week. If you broke even and lost a bunch, it's not a good week. Can you go in depth about how you see buy side liquidity, or do you even look at those? So for me, let's see if we can find an example here. For me, so if I look at this range right now, when I was looking at it the other day, gold had wiped all the buy side liquidity. So my expectation was a run down low, and I thought it would break out of the range and keep heading down. It obviously didn't again. So once again here, you wiped all of this liquidity. The expectations then to wipe the buy side liquidity. Now that we've wiped the buy side liquidity, I would imagine gold's going to run all of this liquidity. And unless you're in a trending market, you're ultimately targeting where the pockets of liquidity are till it is ready to leave the range. And I'm kind of hoping maybe this is a sign of it wanting to leave the range. But as of right now, we'd obviously short that if it was in proper time, as it's in premium and 4 hours bearish. But the whole concept behind it is if the buy side liquidity is gone, the market's going to seek out sell side. So again, it's the same thing here. All your liquidity is wiped in the whole range. The expectation then is to come wipe all of that. And if your plan aligns with the higher time frame, then it makes sense. And generally, the ranges get wiped 2, 3, 4 times, and then it'll leave the range. So from a 4-hour perspective, we made a lower low, the expectations a lower high and a lower low as of right now. If it doesn't do that and this for some reason holds, then I guess we could see it continue trending up as the trend's not confirmed. But from the daily and the weekly perspective, Euro looks like it should trend down, but at any given time, somebody can say something and change the direction of this pair or any pair for that matter. And I, kind of hoping somebody does something here because this ranging market's been a little bit annoying. But as far as buy side and sell side liquidity, it's again, it gets into your external range liquidity and internal range liquidity, right? If you go back to the concept we talked about in the course, if the little bowl's filled, chances are the market's going to head the other direction and seek out more liquidity. I'd suggest as well looking at the change in TP depending on market conditions. For example, if it's a choppy market, you could drop TP below the 5R, but if it's really trendy, 5Rs. Exactly. And one of the things I've been really big on lately is if you're pro 4-hour trend and you got in a well-priced trade, you can hold it. If you're counter 4-hour trend, that's not really one I would get greedy on. If you're in an unconfirmed trend, I would definitely not get greedy. See, it's really easy. That's what I found in my back test anyway. The likelihood of 5R is pretty good when the market's in trend. Yeah, and that's something me and Brian have been talking about a lot in the last couple of weeks, how the market really hasn't been trending a whole lot, and every strategy is based on a trending market. So when you're gathering data, you got to gather data and look at where you're gathering it from, because I started gathering some data from areas like this when it's in the middle of the range, and that's not really data you can do anything with because it's middle of the range. It's a rangy market, and until you're trending, you can't really be like, well, my hit rate was really low in that area. I'm like, well, yeah, sure it was, but why? Well, you were playing in a range for a week, and it doesn't matter if you're trading this or trend lines or support or resistance. They require for the market to have a direction, and our system's no different. Hi Rob, I just joined this week, currently watching the course videos on the mid. I hope there's any video there about using divergence. If not, can you show how to use it a bit of Confluence? So to be completely honest with you, I literally don't even look at it in any other way other than there's 2 ways I look at it. If I start seeing it appear, I know the likelihood is we're reaching a bottom or a top like you see here. Or the other way I'll look at it is if we go back to, so this trade here, for example, that I laid out for you guys earlier on the gold short. So right here, we got a chalk and flip. Right here, you get your break, you get your nice tap in, and right here you also get divergence. So once the price action lines up and the chalk is there, if I get a divergence line, I feel more comfortable about shorting that. It's an extra confluence. Whereas if I just get a divergence line, but I don't get a chalk, I don't recommend just start shorting. It's supposed to be a tool to help you find bottoms and tops, but it's supposed to be like, okay, divergence is appearing. We're likely near a top or bottom. Does it fit my trade plan? Okay, great. But until this happens, you don't have a trade idea. I don't care if you had divergence all the way up. At the end of the day, the 99% of the course is price action, because that's what you're looking at. What is market structure showing me? What is trend showing me? Okay, what is pricing like? Okay, cool. I want a short. Right here, you get an idea, and divergence just happens to support it. This trade has a slightly higher probability of the short succeeding than if the divergence wasn't here, let's say. And that's the only way I really use divergence. For a while there, I got a little bit too relied on indicators. And after I put it to the test, ultimately, indicators come second to me. While we are on the topic, Brian and I are actually working on changing RSI divergence over for you guys. So this isn't the final version you see. The version that we have has this MA line. You'll still have that back. This is the testing of a completely new version, which is testing's not complete. And this is probably version 1 right now. And you guys will likely get it by the time it's version 2 or 3 and we've had it tested. But what we're going to do is give you the same divergence and entry indicator we already have. But what you're going to be able to do is choose if you want wicks or if you want candle bodies. And right now, what we're testing here is actually it's running pivot points only. So to give you an example here, like it'll only pull divergence off pivots and rather than just candles. And what Brian and I have found is you get less signals, but when you do get signals, they're better signals. For those of you that want to keep divergence the way it is, you'll be able to keep the settings the same. And for those of you that want to run pivot divergence, which is what Brian and I are switching to, you'll be able to change that in the settings too. So it'll basically be an enhanced version of the same one we have, and you'll have a few more options to play with. Let's see if we can find, I don't know if gold's the proper pair. So right here, for example, this is a divergence from a pivot point to a pivot point. Market goes down. Whereas our old, the way it is right now, it would only pull a divergence from here because it only looked back at so many candles. Whereas now, rather than candles, it's measuring pivot points. So it'll go from here to here. It'll measure from here to here, but it won't so much just measure candle bodies. And you'll be able to fully, we'll go over that when it comes out, whether it's in the Q&A or we make a quick video about it. But like I said, what we found is you get way less signals with this, but when there is a signal, there's stronger signals. And ultimately, the chart's cleaner. You also noticed I've removed the hidden divergence. I found it to be rather useless in our style of trading, as we're pullback traders. We're not breakout traders. If we were breakout traders, I'd probably push the hidden divergence quite heavy. You'll still be able to keep it on if you want it. I just found them not of much use to our style of trading. What do you think about the DXY tapping the fib? Okay, so I'm glad you brought this up. So I went through the ICT mentorship, and one of ICT's 190 confluences he needs to enter a trade is the DXY's got to line up and the fib's got to line up and the stars got to be in alignment and all this. I did that for probably a good 6 months, and I found the DXY to be completely useless in day trading. What the dollar index is doing in terms of long-term structure and where it's heading, I think is very important. What the dollar index is doing today in regards to what the market's going to do today isn't of any use. The DXY is kind of like the fib. It's not the fib, the interest rates. It's a long-term projection. And back to your fib, the 786 and the 764. Yeah, I know Alex preaches the 764. That comes down to personal preference. I prefer the 786 myself, but in all honesty, I've made the fib round numbers, as you guys see. The same fib I showed you guys, this is all I use for a fib. If it's, I know where, if it's in this zone, that's relative equilibrium. Anything above the 40 is premium priced. Anything below 60 is in discount. That's as simple as the fib is to me. I don't really, my first strategy I actually learned was support and resistance. And then I went from that to the fib, and it works, but it's just common sense. If the market went up so much, it's going to retrace and continue going up. I don't really think the fib's got a lot of value to myself anyway, aside from telling me of how well priced it is. And I've made pricing even simpler. I look at the impulse of the last 4 hour high to low, and that's all I care about on the fib. I haven't been pulling it too much on the 15. Even with the 15 trend, I look at it as either a tiny pullback on the 4 hour or a continuation on the 4 hour. So I based all my stuff on the 4 hour as much as I can. The fib itself is completely irrelevant. What I usually do is shoot one of these dotted lines on equilibrium and completely remove it. So I'm talking about a yearly move, year range. Again, I honestly haven't looked at the DXY in over a year. Like, I've looked at it for maybe 5 minutes at a time, and every time I do, it brings back memories of when I sat there for an hour a day, every day, staring at it, and it did absolutely nothing for my trading. If you were holding for weeks or months at a time, I think the DXY would be very important to you. Interest rates would be very important to you. As a day trader, trade what the market's showing you. Which way is momentum's heading? Which way is 4 hour structure heading? Okay, does that align a trade idea for me today? Cool. If you change your trading style and you're going from, you're entering on the 4 hour and you're going from weekly zone to weekly zone, yeah, you're going to want to start looking at the DXY. And if you really want to know where you think it's heading, you're going to want to start looking at the DXY. But I don't know. Like I said, I just found it to be more noise than anything else. If I get to the point where I only want to swing trade, 100%, I'll be on the DXY, 100%. I'll be monitoring every interest rate closely. But as of right now, I don't even care what news say. Like, I know a lot of people read every single news article that comes out. I just know what time the red folders are, and I know not to trade them until the candles are a decent size. That as much as I look into news. When I look at this, I look at what time they are, and I make sure I have no risk in the market at that point, or preferably not even in a trade if I'm close, if the entry's very close to where we're at. But that's as far as you really need to worry about the DXY, the news. And, if you found something different, that's totally cool. Trading is meant to be subjective. It's meant to be your own. But if you're closing 60, 70, 80% of your position out each day, does the DXY or anything else really matter? Not really. Does the fib really matter? It's, again, subjective. If you're getting good pricing, that's as much as you need the fib for. As far as the 786 versus the 764, the 2% difference on that fib really makes no difference. So hopefully that makes some sense. And like I said, if the fib is a confluence of yours and you want to use it because you want that well of a price trade every time, that's totally cool. Like, I know guys that rely on the fib religiously and they're good traders and it works for them. I did it forever because ICT just pushed it and pushed it and pushed it. And at the end, I found it wasn't for me, and I personally don't need it. But
that old OTE.
Yeah, exactly. One thing I actually recently remembered is ICT pulled his fib from candle body to candle body. And I'm like, I think the old man is onto something there, especially now that we've been switching to chalks with candle bodies. It makes sense, right? That's where your volume's the heaviest. That's where the candle actually closed. It actually makes sense pulling the fib from body to body too. So it's just in the last 2 weeks, I've really brought in a lot of new things. And I can tell you right now, I probably saved myself 6 or 7 losses in the last 2 weeks just looking for body break chalks like the way Brian showed me. And it's definitely brought in less opportunity for me, but it's just saved me so many losses. Like I personally love it. It's I'd rather have 3 trades go in a week than be in 20 trades and have 5 go. And just I find less trades is less stress on the head too. It's again still in testing, and what I showed you guys earlier, I'm testing. But at the end of the day, the way if you think about it, if you want the zone to be wiped, you need a 4-hour candle body through it before the zone is wiped. If you get a wick, this zone is still good. If you want to break a structure up here, you need a candle body. If it's just a wick, it's not a break of structure. So if you think of it from a chalk perspective, the candle body sense makes a lot of sense in that way too. But on the liquidity sweep sides, I'm not sure. That's something I'll be testing, and yeah, we'll have an answer for you guys in the next few weeks once we see enough trades go or fail. As of right now, I've only really noticed a couple trades with what I told you guys about. So give me till maybe the end of the month. We'll have some proper data on that. Does anybody else have any questions? You've been all quite quiet. I thought you guys would have a lot of questions with the market.
I got one real quick. You see this 4-hour demand right here that made a new high. Would you pull the to the right?
That,
Let me annotate.
you're talking this one here?
Yeah. That one, that on Doji, that hammer or whatever.
Yeah.
Would you pull, say, from that the little body or the whole wick with it, or what?
I'd probably pull this range. Like to me, that's what I would pull. I know a lot of people will pull this whole wick.
Mm-hmm.
I personally like bodies, so I'd probably pull the range like that.
Okay.
Yeah, and then that's again. This is it all comes down to your testing and what you like. If I get a zone that I'm unsure of though, and I don't know what to do, I'll pull the whole zone. And I don't know why that keeps happening. Oh, I know why. Those aren't supposed to show up on the 4-hour. I get it. But yeah, if you're not sure what to do, pull a bigger zone, and if nothing else, you'll have a big ugly zone, but you're completely covered. To me, I would personally refine that to something like this. That's what I see as a demand there, because this whole area here, it kind of started to move, but it didn't. Because to me, the demand's the candle before momentum, preferably the last down candle before an up candle. That's an ideal demand. Obviously, the market doesn't always give you ideal candles, but if nothing else, the candle before momentum, and you don't really get a proper candle. So I pulled a little range here. A lot of times too, if you go to a couple other time frames, so even from a 2-hour perspective, I'd probably take this up a bit and cover the bodies. But again, you're covering a range. If you cover the range, that's where the heavy volume's sitting, and that's usually a pretty good zone to pull. Hopefully that makes some sense. If you can't,
I got it.
If you can't find a clean zone, cycle through a couple of time frames, and you might adjust something. Anyone else?
Yeah. On you. 1 minute. Can you go there?
Oh, 1 minute. Yeah, we
Yeah,
absolutely.
It's a bit low, but
Give me 2 seconds here. I'll just make it a little bigger.
and now to the left. I'll annotate. Okay, so like these type of candles here, it's probably based on news, right?
I don't know what this was. I was actually watching this when this happened, and I don't know if that's a shakeout by the banks or if somebody said something at that time. But yeah, generally when you see something like that, it's somebody like Trump tweeted something, or it could be a shakeout by the banks. I know I was actually sitting on EU when that happened. I was like, well, that's weird because I was kind of hoping at the time, I believe. Hold on, I think I was waiting for it to come down here at the time to see if I could get a buy because this was the higher time frame chalk. But
Yeah, I think that was when the Russian news came out and they said that they're wanting to talk about the peace or something about that, and it just goes up. Our reaction goes down. So I was looking for buys maybe here, but we didn't have this higher demand, so I wasn't entering on that. Just but like yesterday
well,
also.
here, hold on. So let's go. Speaking of demand, so this here. Let's see. I found something somewhere here.
So
Yeah.
before this even happened, after
So
the
this wouldn't even
reaction.
be a demand to me till it did something, right? So on the 13-minute here, you got a candle body closed above this wick. Only at that point would I pull that as a demand. It needs to do something. Until it does something, it's not really a proper demand. So like on the 12-minute, it comes up here, you get a wick. That's not a demand yet. Like I need that candle body close on something that did something, right? The only other way you could look at this is it is a flip zone, but either way, if it's a flip zone, you still need a candle body. And only when a body goes, I don't know why, but my stuff's really okay. There it is. Until you get that candle body through either a supply or you get a candle body above a wick and it breaks substructure, this is not a demand. So, which means you can't use this for anything until it does something. That's the way I view it.
Mm-hmm.
So, like I said, I was watching this and I was really hoping at the time that it was going to come back here and maybe we could take a buy up to this supply, but it never happened. It's been a lot of choppiness and it's been a lot of price just takes off and doesn't come back. Like the short up here just kind of left and it never came back.
So here you can see on 1 minute, it was, I think, New York on FOMC.
Yeah.
It did create inducement here, and price just ran the liquidity through all the Asian session to here, building all the liquidity here, and then just dipped from this zone.
Well, if you look at what the trend is doing on euro, the little bit of trend that it does have, it has been inching down. So as of right now, until it does something, it's just down, right? I was thinking a lower high on the higher time frame, but I don't know. Maybe it'll come through this demand.
So would you look for the daily demand maybe then?
I honestly haven't used daily for much other than to see where the 4-hour trend will likely get into premium or discount. So just to give you an idea, this was a daily high, daily low. If you pulled a fib, it came into 50% and then it tanked. That's pretty much all I use daily for. Pretty much, I would say 90% of my analysis is 4-hour, and then 10 to 30 is the minor time frame I use for analysis. What's the name of the volume indicator you use? Just regular volume, whatever it is. Let's see. Just volume. It should come on your trading view. You can look them up too. There's a million different volume indicators. They'll all do the same thing. I wouldn't even get too caught up on if it's bearish volume or bullish volume. I would just look at the total volume and what direction it's heading. Does anybody else have anything? And just before we get off to your daily time frame question you were asking, we had this low, had a high, put in a new low, had a pullback. From the daily perspective, the expectation is another low. I just don't know if we'll see a bit of retracement on the 4 hour and then a low, or what the deal is, but that's kind of my expectation for euro at this point. And yeah, we'll see.
And where would you pull your daily demand from? The next stop zone?
I probably wouldn't even pull a daily demand.
Mhm.
I would look at where the weekly's sitting.
Okay.
So if so this says daily, but it's a weekly zone because I don't have weekly weekly demand. But I would likely pull this, which is another weekly zone. We're gonna call it a daily because I don't have weekly yet. But that's about what I'd have for my higher time frame demands right now. This has already had a reaction. It may or may not give us another one. I don't know. This one's here's had a reaction. We do have a lot of liquidity sitting here. And the way this is, I could definitely see a reaction from that one. This guy here, again, we'll see what it does. I don't really want to teach people to be a fortune teller and predict what the market's doing. All I know is if it made a low, we expect a lower high and then another lower low. And if it fails to make another low and it turns around, then we basically expect it to go the other direction. Makes sense. Okay. Cool. What else does anybody have for a question? Nobody, hey? I really thought you guys would be a lively bunch and have a bunch of questions since the market wasn't really doing a whole lot of good stuff. That's totally cool though. If you guys don't have any questions, we can end it here. If you do, definitely say something. If you want to share a chart, that's cool too. Totally up to you guys. I haven't even looked who all showed up. Good on. What else we got? Did you have a look at NOS? Yes, I did. I was wanting to. So when I looked at NOS this morning, this red pen, when I looked at NOS this morning, I had this 4 hour zone pulled and we did get a reaction to it. And here we did kind of have had this chalk here, but then it came into a wick below it. It went up, it failed to follow through. It didn't break this supply. What I was looking at NOS is on the 13-minute, we had this big momentum candle. I was waiting to see if we clear this range. And my hope was to either get in on the flip zone that flipped this supply, or if it went up, maybe even come back to the extreme and continue up. But NOS never did that. It obviously kept going down, which is in line with 4 hour trend right now. From the weekly perspective too, if you look at the way NOS closed last week, I actually didn't even notice this, to be honest. Brian sent this to me, but we hit this weekly supply zone, and then we came back and we have this weekly demand zone. And right now, NOS is kind of in that area that's going to probably determine which way we head for a while. For those of you that read Marco's article, it was talking about how overpriced NOS and the Dow and everything is, and we could see a correction on this stuff. For me, for that theory to become true, I would need a candle body through this, wipe this demand, and then I would imagine NOS would see retracement for a while until it doesn't. If this demand happens to hold the next time it taps and it continues on up and this supply fails, then I imagine it's going to continue on going up. So it's kind of my views on NOS right now. So as of right now, it's keep shorting till the 4-hour trend doesn't want to short anymore. And then once the 4-hour realigns and decides to go up again, we'll start buying again. But as you see right now, NOS failed to run this high and then it just dumped. Now, if it decides that it's going to continue up, and we do have some momentum there, obviously, I'll buy it for a bit. There could even be a chance to buy it up to this supply and continue shorting it down with 4-hour trend. We'll see what it does. I'm really hoping for something to give a trade somewhere tomorrow that's clean and not forced. But this is, like I said, what I was waiting on. At this point, I probably won't take a NOS trade. I may look at it during Tokyo, see what it does. Yeah, what's your question? I imagine it's on EU.
Yeah. So do you look at how wicks are formed, for example? So let's say, let me annotate. There's one wick like this and like this, for example. So that would be our buy. No, that would be our buy side, for example.
I'm not sure I understand.
Yeah, how the wicks are being put for liquidity. I mean,
so for me, I just look at what it's swept, and aside from the wicks, I want to see what the next candle forms. What I really like to see is like a wick up, and then if there's another one, I don't want to see this one go above that one. So like right here, for example, you have kind of a very tiny wick, a wick up, and then this wick fails to go any higher. That's what I like seeing. The next thing I like seeing is either a wick like this, followed by a body going in the direction that we want to go. And the idea is trade away from the sweep. So we want to go up, and this up momentum is confirmed by the body. So in the case of going down, it's the exact same. Does that answer your question, or am I way off?
yeah, and one more thing to add. So let's say it goes up here this wick.
Yeah.
And it goes like this then, and it just goes below this one and then just moves with the candle here, okay? So would this be considered for you as a liquidity created from here?
Yeah, this is totally fine. I want to see what's attached to the wick too, right?
Mm-hmm.
Like it's totally fine for it to do something like this, but for example, if I get a little body like this, I'm not 100% convinced yet. This is really good if I want to buy, but I still want to see something with a body that's confirming for sure that's going. This is great confluence, but if you have the two combined, that's better confluence.
Okay.
Yeah, it's like, for example, like right here, you get a really long wick. The next candle that follows is a bearish candle, 2 bearish candles actually, and you got a wick to the other side. This wick right now at this point wouldn't be convincing to me. Where this wick becomes convincing to me is where this candle body crosses that. And at that point, I'll be like, okay, maybe we're going up, and then you get this wick to the upside, still not convincing, and then you get another full body candle and you're still wondering, then you finally break that, and now you get your wick back down, which is your entry. So you're almost you're waiting for extra confirmation, and that comes from the bodies. So here's a good one for you. Long wick, bearish engulfing. That's what something like you want to see. Momentum in the other direction, right? The idea is to trade in line with momentum as long as you can. Because for the most part, if there's momentum, you have a chance of your trade following through. One last question. Go ahead, man.
Yep. So, for example, if you see something like this, would you go and see on lower time frames if it's like if it's liquidity created, probably maybe equal highs with the wicks?
Well, I can see what this wick did. You grab the equals right there.
Mm-hmm.
I don't do a whole lot on the equal time on lower time frame aside from entry. If I can't find it from the 10 to 30, it is more than likely irrelevant to my analysis. Like the easiest way to think is the higher time frame candle you can find that supports your bias, the higher probability your analysis has to play out. So if 30 minutes telling me a short's probable, but 4 hours telling me to go long, I'm likely going to go with the 4-hour candle over the 30-minute candle. What the 30-second or the 1-minute candle are doing in the sense of analysis are completely irrelevant. The only time they're relevant is when they're in your higher time frame POIs and they're aligning with what you think is going to happen. Because at the end of the day, you and I can come up with whatever theory and sell ourselves a sell or a buy anywhere. Everybody knows that. But then you start thinking, okay, I have a buy scenario, I have a sell scenario. From where I'm at, a buy scenario is a higher probability because XYZ. And you try to go with the higher probability setups as much as you can. And the idea is if you manage risk well, you'll compound, if that makes sense. So that's where all the things like momentum and sweeps and being in line with trend all come in. As long as you're in line with trend, you will likely do better. I think it might have been a week or two ago, probably last week's call, we were talking about how corrective this 4-hour was and how slow it's going up. Like it was moving up, but it really wasn't moving up. Now look at this move down. You can tell the bearish pressure is quite a bit stronger than the bullish pressure that we had. And momentum's again measured in pips traveled versus time elapsed. So if you went ahead and measured from here to here, that's 24 days. In 24 days time, you travel 379 pips. Now, if we measure from here to here, well, wrong tool. Hold on 2 seconds, guys. If we measure from here to here where we are now, and we measure the momentum this way, you travel 320 pips, but only in 7 days. So now if you're really looking at it, you can see it with your eye, but if you're ever unsure, measure time elapsed versus pips traveled, and you'll likely be able to tell what the market's true intentions are. Like momentum does not lie, whether it's over a week or 2 or 3 or a month, or you're just looking at a single candle. Usually a momentum is one of your greatest strategies. And in your case, Alex, the guy that teaches the 7-6-4 strategy, Alex pairs the 7-6-4 strategy with momentum and divergence.
Yeah.
His whole strategy relies on momentum and divergence. That's what it is.
Yep.
Ken, what's your question, buddy?
I slick forgot it, but did you say you took a sell in euro today, or you was about to?
No, I didn't trade today. I only took a few trades this whole week. Like I only traded 2 days out of this whole week. I wanted to sell euro. It never came back. So I would have been, let's see, let's get rid of that. So euro did dump today. Where's that? Hold on 2 seconds, guys. Yes, okay. So euro did dump today. I have an alarm set here I would have been more than happy to short from up there. My zone never got tapped. I think it was the half hour it came back to or something. So if you pulled the half hour zone, well, no, it wouldn't have even got tapped because it wasn't the zone that did anything. So yeah, for me, that wouldn't have even worked. The 20-minute zone got tapped because it took this out. So this zone, I guess I could have pulled. I had the 15 pulled. I was waiting for it to come back, but I would have been more than happy to short from this zone. And that's kind of what the market's been doing a lot. It's just been kind of taking off, not coming back lately.
Okay. See, that's why I kind of mess up sometimes on. So sometimes I call this like demand. Then I cause myself to miss a trade because I missed this demand right here. But I wouldn't have, in my opinion, I wouldn't have saw that because it wasn't a body break up here.
No, and like so it's kind of a weird thing. Like it's not a demand in the sense of it didn't do anything, but if I break through it, it is, if nothing else, it's a substructure break, right?
Mm-hmm.
So then this would make this a supply zone for me. So hopefully that makes some sense. But yeah, for this to be a demand, you need it to candle body close above something. Yeah, does that kind of help you out?
Yeah, it does.
All right. Well, cool stuff, guys. We'll end this one here. I will get the emails out for backtesting session in the next few hours, and I'll get this uploaded here right away. If you guys do have some questions you think of later, feel free to post them in questions and tag me or someone else from the team, and we'll be more than happy to answer. If you're going to do that, post the chart with a higher time frame, reason for why you did what you did, and we could probably help you out. The 1 minute charts are hard to break down if we don't see the higher time frame charts with it. But yeah, thank you everyone for coming out, and we'll see a bunch of you guys on Sunday. Have a good day, guys.